Good morning. Welcome to Options Trader. It is Wednesday, May 8th, 2024. Welcome, everybody. I'm going to do a top-down point of view from SPY. It's SPY, the ETF for the market. And then on a daily time frame, I'll swing around the board and we'll do SMH, the semiconductors, SPY, QQQ, IWM, maybe DIA, and then the VIX. Just to kind of give you the new drawings, I do think we have our top in as of yesterday, and we're retesting those tops, so I'll show you that on the 65-minute on SPY. But I want to give you the daily point of view of how things could end up on a more conservative term all the way to our extremes. All right, so make sure you stick around. If you're new here, go down to that bottom right-hand corner, hit that Options Tender logo, and subscribe. We're going to start off with the monthly time frame. Thanks for all the likes, you guys. This channel's been growing. It's a beautiful thing. Let's keep it that way. SPY on the monthly time frame, 2,000. We have the top there, have a touch, and we're forming this bearish rising wedge. Now, in the monthly time frame, we recently have not touched the top of that wedge. Is that possible? Absolutely. We have a secondary scenario where we get a new high here. So that's something that we'll go through on the daily time frame. But as of right now, I think, and I'm going to play as if we have a top. And right now we're going to look for some sort of correction and or impulse to the downside. Both will probably be difficult to discern when you're looking at Elliott wave. It's very speculative, and people can count a 5-wave impulse and a 3-wave. You know, each trader is going to have a different way to count it. So anyway, I won't dwell on that. Let's go ahead and dive into it. All I want to look at was the possibility of going one more time to the upside to touch that trend line. Also, we're an inside month, so we have plenty of month left. Could this end up just being an inside month? Absolutely. We have a wide range to trade with, so we will be trading. But ultimately, I do think we get down to this possibly to the 460 area. And more conservative is this top here at the 470, we'll call it 480. So those are things to look at in the higher time frame. An extreme would be to get into this consolidation area. But at minimum, I think we test it as the breakout. Okay, going down to the weekly. Where's that weekly board? Right here. Okay. Same thing. You have the top of this. You have this channel. Is the channel good? I don't know, but we're putting this there. We have a great trend line to the upside. So we have all these touches along this trend line. It's valid, but we only have one here. So we're kind of anticipating, if we start to reach these levels that I was just talking about in the monthly time frame, we have this channel bottom. So if we hold this channel bottom, there is the opportunity to go back up to the top of the channel. Also, the trend line from 2000 and the top of 2022 as well. So always got to keep that in mind. My primary scenario is that we do the same thing for the bulls or the bears. We come down, test these zones, either get a bounce and break down or make new highs. We'll have to see how the indicators and time relationships and things like that happen as this progresses. But right now we're in a really good opportunistic area where bulls and bears should be looking for the same thing. And some people are looking for new highs right now. Possible. Sure. Absolutely. But I don't think that's probable. I think we test down lower according to indicators. So let's jump down to the daily time frame, and we'll spend a little bit more time on the daily. All right, daily trend is our friend. Now, what's new on this situation? First of all, backtracking, if you're new here, I like to show the pathway. This is a consolidation area. It's our breakout. So that's what I think we're trying to test. And so I have this green box here to see if we get down to those levels. We certainly don't have to, and we could go further. I know that that's a lot. Nobody can predict the future, but that's why we have our indicators when we get to these levels, and our indicators should be, giving us extreme readings. It should be giving us divergences, things like that. Now, what's new on this chart is I have the triangle and the white drawn. That's an equilibrium. That's very typical with a trend change. And, if this triangle doesn't break and we make new highs, that's a stronger market. That calls for a stronger market. And that would typically be sort of a wave 4 outlook. I'll show you the what I have for the Elliott wave on the daily time frame in just a minute. But we break down from this triangle, and now we deal with these levels. So you have the 490 zone, 488. And I'll show you a couple things that could make this zone also another way to do a wave 4. So triangle holds, it's a much stronger market. You go up, you break down from the triangle. Now you have a flag, a potential flag. Again, I'm not looking, I have to keep this in mind. I have to do these things because I don't want to get my face ripped off and just expect the market to make it down here. My expectations are down here. If we get down to these levels, 488, 490, probably see a reaction. But if we break down from here, I know why and I know where it's going. Okay, so that's what we're looking at there. Again, that's just assuming, the bulls are assuming that this is wave 4 action. We have one more wave up. All right, now even if you're a bull, I still think this is breaking down. I still think we're going to have a deep retracement, and I'll show you why. Let's go to first of all, our primary scenario. It's our expanded ending diagonal pattern, also known as a blow-off top. We made our first target out of 2 to the 127.2. That is a possibility of a major top here. And we're just setting up for an impulse wave down. You have your first wave for 1, 2 up, and now you must go down 3, 4, 5. Probably test the bottom of this area, and that's according to this map. Get a nice bounce and head lower. What do we have here? All right, these projections, digging in a little bit more, these projections say, hey, this wave 2 is done, and we're looking for, no matter what, if you're an A, B, C, or a 1, 2, 3, we're looking for the 200-day moving average. We're looking for this 468 if this top is good. Now, the minimum, very minimum on the bullish side, and this is the bottom of the flag, would be just 100% retracement. That would be a relationship for this would be an A, where A equals, that's the top of B, where A equals C. All right, so this wave and the last wave would be equal down to here at this 100% extension, and that would be the 488 area. So I do know that I'm pretty aggressive right now on my trades, and I think my aggressive trades will bring us at minimum to here, and then I'll start to lighten up and trade just a little bit differently as we get down to lower levels. All right. Okay, now let's take a look at our secondary pathway. This is a very busy chart. I have the time ratios on here. So kind of look through that. Maybe I should highlight these a little different so you can see them. That's the pathway that I'm looking at. All right. I think that might, what do you think? All right, I think that might be a little bit better. Okay, so you can see through this. So now this scenario, that's the bottom. We're looking at an ending diagonal. and it's going to be a much larger move to the upside. So this is an ABC. There, you can look it up. I'm not going to waste everybody's time, but an ABC for 1, ABC for 2, ABC for 3, much larger wave. And 4 has the potential to cross over wave 1 in an ending diagonal. So it doesn't have to, but that's what I'm looking at for this move to head lower. A deeper retracement, draw all the bears in, slightly cross over this, in this, say, 50-60% retracement zone. And in this scenario, get to new highs. And what was that new high? We have the 162% retracement from all of year 2022, that huge retracement. This is the extension from that move. So that's around the 560. All right. I know that's a massive move to the upside. This is secondary. If we start holding prices, and especially if we make a new high above the wave 3 after a big drop, that would be our next target. Okay, now, as far as time relationships, I'll zoom in here. We hit our time relationship for 5-7. If you see the dates down here, I know that they get kind of fuzzy when you have clusters. We had a cluster on the lower time frames and the higher time frame at this 5-7. So now I can erase this because, I just want to show you. I just left it on there to show you. We had 3 time factors into that. So that's very significant. And that's why I want to let you know we probably have our high in. That was 5-7. Okay, that was Monday or Tuesday. That was yesterday. Now, we broke down and we're getting a red candle, hollow red candle, but we're just back testing. Price has to build structure to the downside. It's not typical for price to just break down and just go down in a straight line like the Corona crash. Okay, even then it had massive bounces, but they just happened really, really fast. So this breakdown here has to build, and I'll show you on the lower time frame exactly what I think is happening. Now, after this move, after we get our move down, we do have, again, we have a time relationship on 5/13. So I believe that's Monday. So Monday, time doesn't tell you where price will be, but if Monday were higher, then I think that will be another top opportunity. If we are lower, wherever that might be, if we are lower going into Monday, leading into turnaround Tuesday, then that may be a low, okay? Maybe that brings us to the bottom of that triangle. Maybe it breaks down further. I don't know. But that will be a point where we might have a low in temporarily. It doesn't mean the whole entire trend changed and we go higher. It just means that, something is happening. We might have a trend, lower time trend change or a bounce. All right, then I have to build some more time relationships here for the future. Not quite there yet. We do have another one way out in 5/28, so the end of May and the middle of June. All right, let's go over and just quickly go over the Qs. So looking at the Qs, we have our triangle built in here. I'm not even going to draw the flag yet. Let's see if we break down from the triangle. First, it's SPY, spend most of the time with, and then see how these are working as well. So IWM, we had that bearish rising wedge for the ending diagonal, broke down from it, and we're simply back testing that triangle. We're breaking down. Again, we're getting a bounce today off the 50-day moving average, but I do suspect that will continue to the downside tomorrow, or at least throughout this week. Quick on DIA. I'm not going to go through all these on the 65. I'm just going to go to the SPY on the 65, but getting a bullish engulfing here. Also, it can be considered a tweezer chop, with two almost equal level candles, and that's a possible reversal setup as well. So could be tapping out here into these candle breakdown highs, resistance, right? Resistance back here. You see? That's how we form our resistances. We're at resistance. I don't know if I mentioned it. I do have a market structure video, and I'll put that up top and at the end as well. So we're marking that at about 15 minutes. I'll put that above resistance. Working through, which that just means that there's a lot of volume there. Resistance, same thing. Resistance, and now we're back at resistance. Okay. Now let's check out the VIX. And then we'll go down to 65 on SPY and VIX, and we'll in this video. Now, overall, we're just in this massive falling wedge for the VIX, okay? Massive falling wedge. I'll actually show you on the weekly. That's what we're looking at, just this price action falling into this bullish falling wedge. So we'll look for price to test this top again, coming up here in the near future, the next weeks to months. And I do think we break out of this eventually. And when that does, I think sooner than later. And when it does, we should be having an exaggerated move in the market to the downside. So it's something that we're going to be looking out for. So this trend line didn't hold. We're into a gap area. Today, if the market really doesn't do anything, seeing how there's no catalyst, you have that 12.99 gap fill, possibly get down there and close the gap. And then I think, and we'll see it on the lower time frame, I think there's another gap below that. So, that could allow the market to chop sideways or even make a slight new high. The Qs actually potentially have the options expected to move just a point or two above yesterday's highs and possibly could work its way up there, while other markets kind of hold down SPY not to make a new high. So then you'd have some divergence there between the two. Do I think that's the case? I'm not sure. I'm not looking specifically. I'm keeping an eye on it, but not looking for that to happen specifically. Okay, on to the 65 minute. Now we have in the blue, we have our channel or bull flag kind of drawn out there. And this would be the triangle. So you have the triangle top, that's in the white, triangle bottom, that's in the white. Breakdown from the triangle. Then we test the bottom of the channel for the flag. Okay. This old flag, I know that people are using that. I kept on here because if we test that flag and somehow it doesn't look right to me, there's only one bottom here spot that the bottom of the flag has. Anyway, we'd be back testing this flag and then going to new highs. That is a possibility, but again, it's just not something that I'm looking for. After you break down from this triangle, I think it's sayonara. We have a larger move to the bottom of the flag, and then, in my opinion, much slower than that. Now, in the very near term, I'll just dig in here real tight. Here's what I was showing. We're talking about the options, guys, and we'll talk about structure just for a slight minute here. After this move up here, I think we got our top right here, and we had this initial move down. Okay, so it does look like three waves. It could be an impulse, but it also could be a 1-2, 1-2. Either way, we're making a lower high going back into this whole resistance supply area and rejecting off of it now. But you need to have it's just not going to go in a straight line. We're just making an initial low, and now we're trying to test to see if we make new highs. But with this being a lower high so far, we're starting to build market structure to the downside and changing trend. So that's why this happens. That's why it takes so much time to change trend on the daily time frame, or on the daily especially, but on any time frame, it takes a long time because we get into this equilibrium where the market needs to know if it's going to go higher or break down lower. Now, we know that this is more established as soon as we break down from this candle, the low of today, where we gap down to. So I do expect that to break and continue on, and this would be a, in my opinion, a 1-2-1-2 or a 1-2 setup to go lower and start testing the this kind of expanding wedge here. I think at minimum closing this gap. All right, so on the lower time frames, I think this happens fairly soon, going into maybe Monday. And then again, like, you know, looking at this triangle, just keep this in mind that price could fill this out going into next week. Maybe this, you know, this holds into this week, and that would give us just a doji candle going into next week. And then maybe that's when we have our next move, a reversal candle formed on the weekly time frame. And I know what it'll look like. It'll probably be a pause type candle, but that will be, and then if we break down from the week, that will be our follow through. So this could just fill out more, but I do think we have more downside to go this week. Okay. So not necessarily all the way down to the options expected move. I don't typically guess that we hit both ends. That's very volatile. What I do guess is that we come down to lower levels, get some bounces, maybe, you know, test here at the lower end of the triangle, but not all the way to the options expected move. It's just not probable. It could fly through it, but just not a probable situation. We already hit one in that's satisfied. Let's see where we reverse from here. I have all sorts of time frames on my puts, so make sure, you know, if you're only a few days, you know, options with your options, your contracts expirations, then you got to take profit when you have it. Okay, just know in our room when I give trades, I have longer swings out. So my daily, I had some trades gone in today. I still have them. I didn't take them off. I'm not really worried about them because they're not much in the scheme of things for me. So if we make a new low today, great. Then, you know, I'll profit on those. But I'm not taking them off. They were casinos for me, and I'm just not watching them. Okay, because I've much larger swings to the downside that actually matter, and my stop would be clearly above yesterday's high with a nice close. Okay, and even then I still have to make a decision. I don't have an automatic stop to see what kind of structure this is, what's going on, but I think this is a good top. We had time and price relationship, we have trend lines, we have this whole conglomeration of areas of supply. Okay, so I think this top is good. We're back testing and we go lower. That's what I was saying ultimately. Okay, and then on the lower time frames, we also had those time relationships. Okay, and I can erase them, but we had that Monday and Tuesday, a whole cluster there. So I'm gonna get rid of those. And now that this new possible top, I always have to say possible because, you know, it's just not confirmed until you make a new low, and that's way too far away for us to, you know, say we need a new low under here for this to be called a top. That's just how market structure is. You have to make a new low. Okay, but if you notice that 162 that we talked about, that's the extension from this wave B. So you had a down move wave B, you had a retracement, but the extension was this 162. It's also our 786. We made it there. So I'm going to take those off, kind of keep our board clean. And I don't need these either. Now, Okay, now what's next? That's what we're talking about. So on the daily time frame, you saw those time relationships. Well, on this lower time frame, we have this huge cluster right at 513. So something is happening in 513. We'll just see where price is at the time. And now that we have this possible new top right here, now I can start projecting off of it and adding new time structures on the lower time frame. As we get there, I have to clear up these, but I'm looking for clusters just like this. And so now, what do I mean by relationships? We have a high here, so I can go high to high and kind of project in one of these somewhere will be a low. All right, high to low. So if we're at the bottom of the triangle or the bottom of that flag that we were talking about earlier, we'll look for the clusters of time relationships. Now that also is you have a low here. So now you can go low to high to low again. All right. And we already have relationships from high to low. And this was one of them, was to high. So that kind of projected this one here. All right. So that's in a nutshell how we do it. That's how we get these relationships. The market is very, it's symmetrical, and it is with time and it is with price as well. All right, one last glimpse at VIX and show you, and then we'll end this, show you kind of where we could be looking, forming this bullish falling wedge right now. I don't know if I could draw another line from this bottom. So there's a bottom there, there's a bottom here. So, you know, possible that we drip down here slowly, but we're at this support, and I'll extend that now. Keep that support extended. So we're just about at support there. So notice I didn't draw that. We've just used this for a long time. Just extended it, and we're almost there. Just about to close the gap. So maybe we just go down a little bit lower, and just with price action not really doing much today, the VIX can drip down while the market just kind of tries to test the highs there. And then there's a gap with this trend support here as well. So if we look at the VIX and it starts to form its structure, a bullish structure, making higher highs and higher lows, then we'll be able to say, hey, maybe the market is looking to fall now. So if you look at this low, you had the rejection, but made a higher low, higher high, higher low, higher high, higher low. So the market structure really started to come in there rapidly. We don't have that yet. We don't have any sort of structure there. We're just trying to pin out a low. Is this the low? I don't know, because we made a new low, I believe. That's 1316 is this low here. And now we made a low at 13. I think we have a double bottom so far, 1316. And so, yeah, so we didn't necessarily make a new low, but a double bottom. We'll see if we can make a new high above here, above this 1350. And I already have my alert for that. All right, that's all I got for you. Thanks for joining us here at Options Center. Don't forget to like the video, and we will talk to you tomorrow, I think.